Hello, this is Rick Cortez with the first update of the new year. Happy New Year for the Westwood Broadmark Tactical Growth Strategy. And what I'd like to do as we enter 2026 is point out 4 similarities between now and other market cycles. Number 1, Bloomberg reports that virtually all market strategists on Wall Street are bullish for 2026. Now, I'm sure this has happened before, but I'm reminded of January 1973, when Barron's ran its roundtable. The title was Not a Bear Among Them. And of course, the market went down 50% over the next 2 years. Number 2, market leadership is very narrow. On your screen, you see the information technology sector of the S&P 500. It's now 35% of the index. It's above where it was at the dot-com top. Has this narrow leadership happened before? Yes, it has. It happened in 1973 with the Nifty 50. It happened in the late 70s with the oil stocks, and it happened during the dot-com boom of the late 90s. Number 3, there are 3 major classes of investors who are fully committed to the market. Foreign investments in U.S. stocks is at a record high. U.S. mutual funds have a record low in cash. And as you can see on your screen, U.S. households now have more in common stocks than ever before. And this chart goes back to the 1950s. If we ask, when U.S. households have gone to a record high, what happens afterwards? The answer is that there have been single-digit returns in the next 10 years. Number 4, equity valuations are elevated. The chart on your screen shows Warren Buffett's favorite valuation metric, which is stock market capitalization divided by GDP. And as you can see, this has gone to new highs in recent months. And the great thing about this chart is it goes back to the 1920s. You can see that there are 3 distinct peaks prior to now: 1929, 1973, and the year 2000. Now, we've completed 3 consecutive years of up markets with double-digit gains. Could we do a 4th? The answer is yes. There is precedent for this, notably in the Roaring 20s. 1925 to 1929, the market went up 4 consecutive years into the top. And during the technology boom of the 1990s, 1995 to 1999. Now, we don't predict, we adapt. What we're doing is we're pointing out that as we go into 2026, there are some parallels between now and history, and risks are rising. I want to remind you that our strategy protected clients during the COVID decline in 2020, and we showed positive returns in the bear market years of 2002 and 2008. So we don't predict, we adapt. And I want to assure you that our team is ready for any eventuality in 2026, whether it's up or down. So this is Rick Cortez. Thanks so much for joining me. Please join me in February for the next update.